Good morning, everybody. Happy Monday. It's September 18th, 2023. Great to be with all of you today. My name is Bob Lang. It's time for our daily bites, and we're going to talk about markets here for a little bit and what we have in store here. So let's go ahead and get started. As you know, or may have heard, that the Federal Reserve has a meeting this week, starts tomorrow, and it will end on Wednesday with a policy decision. More than likely, the Fed may pause here, but it certainly wouldn't be a surprise if they raised rates one more time to 5.5%. I realize that the odds and the probabilities based on the Fed funds futures are extremely low for that to happen. In fact, let's take a look at the Fed funds futures right now. Let's see here. We go here. So here's the Fed funds futures, and they're estimating about a 1% chance, almost nil, of a rate hike coming on Wednesday. Now, if we pan out to November and December, about 30%. So it's about a 2-to-1 chance that they're going to stand pat in November. It's a little bit lesser of a chance of standing pat in December. It's about a 37 or 40% chance of a rate hike. And you can see that there's a double rate hike actually being priced in for December. So, last week's inflation numbers were nothing that the Fed is going to be pleased about. I'm sure they're going to be talking about it. But at this point in time, when you see this, it's hard to believe that the Fed is going to disappoint the markets right now. But they've done that in the past. It doesn't happen too often, but when you see this 99% there, they're likely to be in line with what the market is expecting. So speaking of the markets, let's take a look at this morning's futures. S&P Futures down about 3.5. They were down a little bit worse earlier. They were down to about 44.87. Now we're back to 44.94. NASDAQ Futures down a bit more, under 370 on the QQQ. And Russell 2000 is up a little bit. We see oil is up as well. Volatility is up. Oil is up over 91, almost to $92 a barrel. I've been talking about it, oil making a run towards 95 and then up to 98. That looks pretty sure to happen soon. Volatility instruments are up today. Remember, today, Monday the 18th, starts a seasonally weak period in the markets. And what normally happens during these last couple of weeks, we see markets fall regardless of what they've done the first couple of weeks of the month. And of course, markets are down so far in September, following a down month in August. So we'll see where the markets fall to. Now, taking a look at the SPY right here, we see that the SPY closed just right around the 20-day moving average. Comes in about 443.46. We came in about 10 cents lower than that. We're going to open up a little bit lower, and what you'd want to see is the September low hold here. If you're bullish, at least for a bit of a rebound, 441.19, right? And that it's somewhat in line with that push that we had at the end of August, that one day where the market surged over 1.5%. But we've made lower highs in the chart here, and that's not you can't deny that. And simply put, look, you can see here that this let's straight line for that. You can see that a series of lower highs, but we also do have a series of higher lows here. And you can see what we did cross under that triangle on Friday with some really heavy volume. Now, why such heavy volume on Friday? It was because it was a big expiration week, and we had a lot of options expire at the close on Friday. And if anybody had short puts and they got stock put to them, they have it put to them over the weekend, and they're going to end up having to close those positions today, which is when the markets are down, it's going to make it much more difficult to unload those positions. We can see on the indicators over here, the MACD is somewhat flat, starting to roll over here at the end of towards the middle of September. The oscillator here that I use, the Williams percent R, is also down off of its peak, and we do have negative readings on the oscillators. So let's take a look at those right here. We went down below 0 on Friday, minus 46 on the NASDAQ, minus 17 here, mildly negative. If we get to an oversold reading over here, like such as what we had at the beginning of August, we could expect a bit of a rally. But we're getting ahead of ourselves here. If we get to that level over here, it means the markets are probably having sold off sharply, right? So that's going to be it for today. Not a whole heck of a lot going on this week other than the Fed meeting. We do have FedEx earnings coming out on Wednesday after the close. We'll have Darden on Thursday morning, General Mills on Wednesday morning as well too. Tonight, Stitch Fix, and tomorrow morning, AutoZone. So not a whole heck of a lot going on over here. So just a quick FYI, I will be doing Daily Bites again on Thursday morning, and then I will be off for a week and won't be back until the early part of October. So just a quick heads up on that. So thanks everyone for listening. Thanks for being in the on the Daily Bites every Monday and Thursday morning. And if you're in the chat room, thank you very much for being in the chat room, and I'll see you guys a little bit later on today. And if you're not in the chat room, you should be. Come on in and go to explosiveoptions.net, check it out, and come on into the chat room. We're very happy to have you there when you sign up. So have a great day, everyone, and it's another Manic Monday. Thanks. Bye.